Hey everyone, welcome back to our channel. Today, we've got an exciting topic to discuss that can change your financial future investing. You might be wondering, why should I invest my money? Well, we've got some compelling reasons for you. So grab a snack, sit back, and let's dive in. Investing is like planting seeds for your financial future. One of the most significant benefits is wealth growth. When you invest, your money has the potential to grow over time, outpacing inflation and increasing your net worth significantly. Inflation can eat away at the value of your money if it's sitting idle in a low-interest savings account. Investing can protect your money from losing its purchasing power and help it grow. Another reason to invest is to achieve your financial goals. Whether it's buying your dream house, funding your children's education, or retiring comfortably. Diversification is a key strategy in investing. By spreading your investments across different assets like stocks, bonds, and real estate, you reduce the risk of one investment negatively impacting your entire portfolio. Some investments, like dividend-paying stocks and rental properties, can provide you with regular passive income, giving you an additional revenue stream. Now, picture yourself enjoying your retirement. Investing plays a vital role in retirement planning. Accounts like 401(k)s or IRAs offer tax advantages, making it easier for you to build a comfortable nest egg. Investing is not just about you, it can be a gift for your loved ones too. Building wealth through investments can create a strong financial foundation that can be passed down to future generations, helping to secure their future. Investing can be a fantastic journey of learning and personal growth. Understanding financial markets, economic trends, and different industries empowers you to make informed financial decisions. But remember, with investing comes risks, and it's essential to consider your risk tolerance, financial goals, and time horizon before making any decisions. So, before you jump into the world of investing, do your research, or even better, consult with a financial advisor who can guide you based on your unique circumstances. Let's begin with the stock market returns. Over the years, the average annual return of the U.S. stock market has been around 7% to 10%. Now that's quite impressive, right? But remember, stock market returns can be volatile, and they vary from year to year. So it's crucial to stay invested for the long term to reap the benefits. Next up, let's talk about inflation. The average inflation rate in the United States has been around 2% to 3% annually. Why is this important? Well, if your investments don't outpace inflation, your money's purchasing power may erode over time. Now here's something fascinating. The number of individual investors and retail traders has skyrocketed in recent years. With the rise of online trading platforms, investing has become more accessible to everyone. Retirement planning is crucial, and many people rely on accounts like 401(k)s, IRAs, and pensions to secure their financial future. These accounts offer tax advantages and incentives for long-term investing. Diversification is a must-know strategy for any investor. By spreading your investments across different asset classes like stocks, bonds, real estate, and cash equivalents, you reduce risk and increase the potential for returns. Many younger investors are interested in socially responsible investing and considering ethical and sustainability factors in their decisions. Speaking of accessibility, have you heard about robo-advisors? They're automated platforms that create and manage investment portfolios based on your preferences and risk tolerance. It's like having a personal financial advisor at your fingertips. And let's not forget about the hottest topic, cryptocurrencies. Bitcoin, Ethereum, and other digital assets have taken the financial world by storm, attracting interest from both individual and institutional investors. Next in the seat are ETF. What exactly are ETFs? Well, think of them as a basket of investments, just like a mutual fund. But unlike mutual funds, ETFs trade on stock exchanges, just like individual stocks. This means that when you buy or sell an ETF, you're buying or selling shares of the whole basket, which can contain stocks, bonds, or other assets. It's like getting instant diversification with a single investment. So, why are ETFs a game changer for investors? Let's take a look. First, they offer incredible diversification. making it easy to spread your risk across various companies or sectors without having to buy individual stocks. Another significant advantage of ETFs is their lower expense ratios compared to traditional mutual funds. Since ETFs are passively managed, they aim to replicate the performance of an underlying index, which leads to lower fees. Now, here's the best part. ETFs provide intraday trading. This means you can buy or sell ETF shares throughout the trading day at current market prices, unlike mutual funds, which are only priced at the end of the day. Buying and selling ETFs is as easy as trading individual stocks. You can use limit orders, stop-loss orders, and other trading strategies to control your investment decisions. ETFs come in various flavors too. You can find ETFs that track specific market indices, sectors, commodities, or even ones that follow a specific investment strategy. It's essential to research the ETF's performance, holdings, and expense ratio before investing, just like any other investment. To sum it up, ETFs offer a convenient and cost-effective way to diversify your investments, allowing you to take advantage of the stock market's growth potential while managing risk. So you want to learn how to research investing like a pro? Great choice. First and foremost, keep yourself updated with the latest financial news and publications from trustworthy sources like Bloomberg, CNBC, Financial Times, and the Wall Street Journal. These sources offer valuable insights on market trends, economic developments, and expert analysis to help you stay ahead of the game. Next, pick up some classic investment books and educational resources. Titles like The Intelligent Investor by Benjamin Graham or A Random Walk Down Wall Street by Burton G. Malkiel will give you a strong foundation in investing principles. Don't forget about the power of the internet. Dive into investment websites and blogs like Investopedia, Morningstar, and Seeking Alpha, where you'll find a wealth of information on investment strategies, market analysis, and expert opinions. For personalized advice, reach out to a financial advisor. They can help create a customized investment plan based on your unique financial goals, risk tolerance, and time horizon. If you're a fan of online learning, check out investment courses and webinars. Many financial institutions and universities offer free or paid courses covering various investment topics. Dig into stock screeners and financial market data platforms. Websites like Yahoo Finance, Google Finance, or MarketWatch provide real-time data and essential financial metrics to help you analyze different companies and sectors. If you're interested in specific companies, read their annual reports, quarterly filings, and investor presentations. These documents offer insights into the company's financial health and future prospects. Researching investing can be both exciting and rewarding. Remember to be critical of the information you find, cross-reference data, and consider your long-term goals and risk tolerance before making any decisions. And there you have it, folks. We've covered some essential aspects of investing in this video, and I hope you found the information valuable. Let's quickly recap the key points we discussed. Diversification. Investing in exchange-traded funds, ETFs, offers instant diversification, spreading your risk across various assets and potentially lowering expenses. Research is key. Stay informed by following reputable financial news outlets, reading classic investment books, and exploring trustworthy websites and blogs. Consult with experts. For personalized advice, don't hesitate to consult with a financial advisor who can help tailor a plan to achieve your financial goals. Online learning. Take advantage of online investment courses and webinars to enhance your knowledge and stay updated with the latest trends. Data and analysis. Utilize stock screeners, market data platforms, and company reports to make well-informed investment decisions. Thanks for joining us today. Take care, stay curious, and let's continue building a prosperous future together. See you in the next video.